Welcome to a Now Explained Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explained Rough Cut. So now, let's get explaining. General Ledger Control Accounts. What is a General Ledger Control Account? What you need to be familiar with: source documents, daybooks, ledger cards, general ledger, debits, credits. Other terminology you should understand: double entry bookkeeping and T-account layout. What is a general ledger control account? A general ledger control account is used so that the entries made for ledger cards with high volumes of transactions can be double checked to ensure that all the transactions have been recorded correctly. Control accounts use the values taken from the total columns of the daybooks. For example, for each customer you have created a customer ledger card. An individual customer ledger card contains all the transactions for that customer only. The closing balance on each customer's ledger card at the end of the month is taken and placed on a debtors or a customer list. This is a list of who owes the business money. How do you know if the total of the debtors list is correct? How do you know if all the customers are on this debtors list? What we do is create a debtors control account using the totals from the daybooks. The totals are made up of the individual transactions. Instead of posting all the individual customer transactions, which are posted to each individual customer ledger card, we instead post the totals of the daybooks to the debtors or customers control account. We post the total of all sales invoices from the daybook, the total of all sales credit notes from the daybook, and the total of all customer receipts from the daybook. From this, we can calculate the total of all the customers added together. The control we are doing is checking that the individual transactions add up to the totals. The control account takes the totals from the daybooks and calculates a balance. The individual ledger cards take the individual transactions from the daybooks. The control account ensures that all the individual transactions have been recorded on a customer ledger card. If a transaction gets omitted, then the customer's listing will be wrong and won't agree with the control account. Using the debtors control general ledger account, we can calculate the total of all the customers added together. Here is the total on the debtors control account. So the total of the totals should be equal the total of all the individual transactions. The total of all the individual customer balances on their ledger cards should be equal the total on the customer's ledger control account. In this case, the debtors control account balance agrees to the customer balance listing. We have proved that all the individual customers related transactions have been recorded on the individual customer ledger cards. Here are control account examples. The debtors control account, double checking the customer's balances listing. The creditors control account, double checking the supplier's balances listing. The VAT control, double checking the VAT return. And the bank account used to reconcile the bank statement to check all bank transactions are recorded. This has been an explanation how a general ledger control account is used in bookkeeping and accounting. In a manual bookkeeping system, the control accounts have the total values of daybook columns posted to them. The daybooks are set up to record line items and then totals to allow easy posting to the control accounts. Control accounts are used as a double checking to other manual processes such as completing a VAT return or a bank reconciliation statement. Control accounts are part of the double entry bookkeeping system. For more information, go to nowexplain.com. Thank you for watching.